Hello and welcome to your Daily Five. My name is Erin Swenlin, and I am here to show you the five most important charts to me going into this week, Monday. All right, so we're going to start off by telling you that you can come to my free trading room on Mondays. It's certainly a time in the market where you might want to see what's going on, and I will help you through by showing you what's going on in the market as well as looking at your symbol requests. So just register by going to my homepage at decisionpoint.com and you can register there. It's only a one-time registration. It is a recurring meeting. So join me. All right, well, it's been already a very interesting and rather red day. We have the daily one-year SPY chart. That's where I'm going to start. And as you can see, we started this bloodbath really last week on about Thursday, Wednesday, kind of. We saw a little bit of a decline there. And then since then, it's just been a waterfall. It's just really pretty ugly. Now, Carl and I had been very bullish coming out of this rally right here. It really looked like we were going to get the fulfillment of this double bottom, and we would get a move up here to about 430. And obviously, we spent all this time consolidating, couldn't get above the 50-day EMA. We were still rather hopeful during that period of time. But as of that Wednesday bar back there from last week, we went bearish. And our timing was very good. It's not always that picture perfect, but it definitely worked out last week. So I'll explain to you why very shortly. But first, let's go down here and look. We have the VIX in a big move here to the upside. I invert my VIX so that overbought is on top and oversold is on the bottom. So we are now reaching some oversold readings for the VIX, which does give us a little bit of hope that we might get a bit of a rebound midweek or into later in the week. When you get these oversold readings on the VIX and a puncture beneath that lower Bollinger Band, you generally are going to see a rebound. Hard to imagine right now, but certainly we're setting up for that. The PMO just triggered a sell signal today, and you can see the RSI just completely falling out of bed. So it's not looking too good out there, but the question is, where is the next level of support? And this is the weekly chart for the SPY. I figured that's the best place we could go to look for some support. We had written in this level of support right here at about 380. And we had, as we had tapped that, that's where this measurement of support was. But where is the longer term support? I would say the next level of support is not until we reach about 350 on the SPY. And that's going to be strong support, but the strongest level of support is down here at 330, which would put us at the 2020 top right before that bear market. Whether we're going to start there or stop there as far as this bear market goes, unless we start to see some of the big economic and political pressures and global issues and war, until we see some of those things start to soften, start to turn the other direction, we're probably going to see prices move even lower than this. But right now, my target is 330. It's I don't like to be the bearer of that kind of bad news, but it's pretty much true. If you look at the bias in our short and intermediate terms, I want to show you in particular down here our intermediate term indicators. Right here on Wednesday, that was when we went bearish. And that was because we had been watching our intermediate term indicators continue to rise. They did not get overbought. They were still rising. So that's why we were still hopeful back here during that consolidation that we would see an upside breakout. We already had some warning, to be perfectly honest, because the short-term Swenlin trading oscillators had begun to turn down early in this consolidation period. We looked at it more as an opportunity for these indicators to decompress as price was moving sideways. It was helping relieve those overbought conditions in the short term. Unfortunately, that wasn't just what it was about. It was about more than that, and it was about a short-term downturn. But this was really what got us on our toes on Wednesday, and that's when we told our subscribers to just be on the lookout. This wasn't looking good, and if we did get the breakout, that, as Carl said, look out below. And currently, that's what we're kind of trying to do. We're looking for that bottom. Let's look at, where are we going to invest right now? It's pretty ugly out there, right? So here is a picture of the 10-year Treasury yield. And obviously today up in a major way, big gap up. We've been looking at positive and rising rates. Honestly, when this head and shoulders didn't really come to pass and we got the reversal, that's when Carl and I were like, okay, it looks like it's time for the interest rates to start reversing. I think we're done with our little pullback here, which is all it seems to be, because we were already getting the rebound before, right after we'd broken below the neckline of this head and then left shoulder, right shoulder. So we got the rebound, we got the breakout above the 20. We've been bullish on the Treasury yield since then. So one of the things that we've talked to subscribers about, and I'm sure that DP Diamond subscribers knew about this particular ETF for a long time. And I know that we mentioned it on our Decision Point show quite often, but this is an area where you have a little opportunity, and that is an interest rate hedge ETF, and it's called PFIX. And it basically plays interest rates. So right now it is up 8.3%. In full disclosure, I own it. So it's making today a little less harmful to my portfolio. I'm very heavy energy and gold, and energy is really struggling today. It's down, oh goodness, a lot. So that's not looking good. And, even gold right now, we've been very bullish gold. I still like gold. I still think that might be a good place to be, but I am waiting out just a little bit longer for a nice breakout on gold before I pad my current gold position. But I thought I'd bring this one to the table because it would give you an opportunity to at least maybe profit a little bit off of what's going on. If you like seeing something like I just showed you, you need to come to decisionpoint.com and get one of our subscriptions. The DP Alert is going to give you that overall market view. This is where we told our subscribers about the downturn on the way. Decision Point Diamonds is where I give you 10 stock picks or more per week. This is where people heard about PFIX. So come join us, 2 weeks free. Use the coupon code DP Trial 2, and that is all you need. Thank you so much for watching your Daily 5. Again, my name was Erin Swenlin of DecisionPoint.com.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.